Hey guys, Mike here. So, oh boy, what a day in the market it was, and we had some hot jobs data coming out, and the market's like, uh-oh, because guess what that means? That just increases what? Pretty much nail in the coffin or whatever as far as maybe the Fed, and I put maybe in there because, you never know about the Fed, doing another rate hike, and maybe even, well, of course, going ahead and taking out all those rate cuts for the year. Maybe people can finally stop talking about that, and we're going to go into all that, and plus, look, the economy obviously is being a lot better than most people think, right? And I'll show you what I'm talking about with that, and then kind of show them because it's pretty stunning when you look at it. You go, God, is that really happening? Because a lot of stuff's happening behind the scenes that we're getting data out about now, where it is shocking, but it's pretty easy to explain why it's happening though. So, I want you to see that. But I mean, you can see right here. We'll start off with jobs data, and of course, you had U.S. initial claims come in about where they expected and everything. But as you can see, so it's still kind of going up. But what's going on with the continuous jobless claims? Well, of course, it continues to go down, right? That means people are quitting, applying, and then finding another job and moving on, which I'll show you in just a second. And you can see right here, I mean, here's the big one though. Non-farm employment payrolls, 497,000 in June. And that was way higher than expected. They only expected 225,000. Okay, and so it almost doubled again. Again, these numbers can be all over the place, but the big number to really look at is the annual pay. So meanwhile, it showed that the annual pay was up 6.4%. So people are still making more money, right, and getting jobs. And of course, this is in certain sectors, which I'm going to show you. But then the other one is the ratio of job openings to unemployed workers. It continues to tick down, but still way above the regular average, right? And so even if you want to get down, say, to 1.25, which probably be a good place to get to, still way higher than usual, which is why you see continuous jobless claims going down, right? Because people don't need this after they officially lose a job and apply because they're finding other jobs, right? Then you had ISM services red hot right out of the gates. Remember, the services sector is what the Fed can't touch. I've asked you guys, do you think they can slow it down? Because whatever they're doing ain't working. All right. And so that came in red hot again. And if you look at this breaks it down. And I'm circling the construction and stuff for a video I'm doing for members, but you can see that yourself, a lot of construction jobs and stuff. But when you look down here, remember, they can't affect education and healthcare services, 74,000 more jobs. They can affect leisure and hospitality. But look at that one, 232,000 jobs. Remember, this is probably seasonality. It is what it is. It just means if they're hiring that many people, they need them, right? Because we're doing our thing. But they can't affect with these rates education and healthcare services. And I know some of you guys even put in the comments, you're teachers or whoever, you're in those services. Yeah, even in a recession, it goes up even higher. So they can't affect certain parts of the job market, right? But of course, when all this data came out, what happened? Immediately, this goes to 90, almost 3%, that there'll be a rate hike coming this month. Again, it's not until July 26th, so you don't know because we're going to have all kinds of CPI data coming out. So maybe they back out again, who knows? But again, they're not even touching the job market right now. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And of course, the whole thing is, hey, we need price stability. You keep hearing him talk about that. And he means price stability. What he's talking about is literally just going back to where stuff goes up 2% a month at best, right? Or doesn't go up at all. But, this right here, when you have wages continue to increase, that money's going to get passed on. I know everybody in the comments, I can see it. Look, groceries are really expensive. A lot of stuff is still really expensive. Airline tickets, you name it. A lot of stuff is really expensive, okay? And we all know the way they calculate that data is hot garbage, okay? There's so many problems with the way they calculate CPI, PPI, all of it, all right? And so, and that affects over half the country. Like over half the country, people with enough money they don't even notice price stability, right? I mean, if you're, I don't know, middle to higher, middle class and above, you probably don't even notice it, to be honest with you, unless you're just traveling a whole bunch. But people, making, I don't know, what, 75K or less, maybe even as a couple, they feel it, especially if you got a couple kids, right? And so that's what they're trying to get to. And how do you get to that? You get people to lose their jobs because that way you take away demand. That's the only way to stop it because most of this is basically at this point in time demand driven, right? People just keep paying. Now, to show how the economy and how the Fed, I know, I got to think, they got to be shaking their heads going, wait a minute, what's happening here? And what do I mean? Just look at the housing starts, right? They surged to a 13-month high. So you can see right here, construction of new homes hit 1.63 million in May, the highest since 1.8 million recorded back in April of 2022. So that's still going. I showed you the construction jobs. A lot of that has to do with the infrastructure bill, by the way. Then the U.S. new vehicle sales rise on strong demand. And I'm not talking about just Tesla. I mean, even GM, year over year, is up 20% on their sales. Okay, I mean, that's crazy. Sold 691,000 cars. So it's not just Tesla, right? It's General Motors as well. Then what do you got people doing? You guys even said in the comments, hey, buying homes, right? There may be twice as much, and I'm gonna zoom in on this for 2021, 2.96% for basically $400,000 house. Total, that's 50% of the home price over 30 years, around $604,000 total for the loan. And then you roll down, all of a sudden you go, oh my God, now you're looking at $627K for the whole loan, 157% of the home price over 30 years, over $1 million for the same home. Now, what we do know is this. People are not going to stay in their homes for 30 years. And like you guys point that out, they're going to say people are buying now because they're going to wait for rates to drop to refi, right? And of course, I assume those people are probably hoping that the rates drop pretty soon, but can you imagine them dropping rates this year or even 6 months next year? But you got to think, what, 2 years? They got to drop, right? Now the question is, where are they going to drop? That's what we're going to have to find out, because when they do finally drop, you're going to have a huge surge in business to refinance student loans, car loans, I mean, everything. Any kind of loan you got, people are going to rush in to refinance, right? And so, but people are just kind of gambling. And somebody else made a great point, because I was doing examples yesterday. Why would you go out and buy a house that's worth twice yours? Somebody said, well, I moved in California. If you move from any point in California, you're selling a house that's way up here, and it don't really matter where you move, as long as it's in New York, your price for your new home is going to be down here. So congratulations to that person and whoever is moving from California, because they're getting a good deal, I'm sure. Now, but again, that's what you're seeing. And I just, like I said, just doing members video put out at night about, this infrastructure bill. Put it down in Discord. I'm like, it's secret liquidity is what it is. It's going on. There's no reason for any of us to know about it if you're not in the construction business or you don't run a construction crew or anything like that. But we're talking about hundreds of billions of dollars going out creating good paying jobs, okay? And it will go on for quite a while, right? At least like 2-3 years, most likely, as they trickle that money out. But, it's just something we don't really think about. Like, what's holding up the economy? Look what the government's doing, right? And so what are they doing? Remember that meme of the guy dumping the water over a chain link fence during the flood? And of course, what happened? The water just flooding back in. Like that's what's happening. The Fed's doing their tightening and trying to stop things, and the federal government's going, no. We got to spend to keep things propped up, especially in an election year, big time, right? I mean, you really got to do that. So, that's why you don't see things just falling off a cliff and people are traveling like it's, 1999 and stuff and all that stuff. That's why that continues to go on. Now with the market today, it's been a while since we saw just an overall just really, really red start like this. I mean, everything. This is same stocks I showed you yesterday. The only thing you're going to see green in here is the trash stocks are flat, but it's going to be inverse ETFs, which of course betting on the market to go down, like SARK right there. But it didn't matter what stock it was. Pretty much 99% went red, and not just by like 0.5% or something. So, things were heading down fast this morning. So it really didn't matter what you owned. It was just the overall sell-off. And then when you look over crypto, it's the same thing. I mean, even crypto is getting hit, and I hate to even say cryptos. I know I'm going to get the bots to kill me in the comments here. But, you can see right here, this is every sector, right? Everything just went red. It didn't matter which sector it was. All red. That's just the way it was. But, the thing to watch out for, what we say we're going to track. We're going to track those equal weighted ETFs compared to the SPY and QQQ, right? And you can see, RSP versus SPY, not too bad off, but look at the Qs versus equal weighted, almost double, right? So the QQEW was way down more. And what saved the QQQ or was making it look better was simple. And I don't know, usually I talk about V-shaped recoveries, but it's like that Magnificent Seven, right? Now you got more of a, not so much V-shape, that's kind of V-shape, I guess, but more of a check mark recovery. I'm sure there's a technical term for this pattern here, but more of a check mark, right? That's what happened. I mean, AMD, you go into Apple, see the exact same thing, check mark recovery. Then we go over to NVIDIA, same thing, check mark recovery. Again, these are the big 7. Then you go over to Tesla, pretty much same thing, check mark recovery. Go over to SPY, what happened? Check mark recovery. Qs, check mark recovery. Because it didn't need the other stocks, right, to make that recovery, okay? ISM, not so much. Russell 2000, I mean, it kind of looks like a check mark or just a very misshapen V there. So, because it doesn't have a magnificent 7 in it to pull it up like that. But if we, if you look, keeping it simple here, right? Again, the Qs are just sitting there. Maybe that ends up being a double top. We'll have to see on that one. But again, will it come down and trust the trend line? We'll have to see. It moves very easily in these volume gaps as we talked about. That's why I got the bounce and stuff, because it got what? Oversold. Okay, and dip buyers came in. And that reminds me, because I can't find one, but what I want to find is a meme that's Captain America, and instead of saying Avengers Assemble, having him say dip buyers assemble. Like, if you can find one, please send it to me or something like that, because I'd love to hold on to that so I can put that in these videos instead, because that's what happens, right? I mean, I don't know if you were waiting for that all day. I was. And just say, dip buyers assemble, because that's what happens every time, because we're in this uptrend, right? And the one thing we got to look out for with QQQ is going to be seasonality. And this is what I was talking about with the first part of July. Usually bullish, then we go in the second half, August, all that stuff. And it is an election year too, but you can see where it kind of goes sideways, down some, all that good stuff. Usually it starts around June 20th or June 25th, when you might start seeing some weakness. So just be aware of that. And then looking at IWM, I mean, it's basically a hot mess at this point in time. I mean, it's pretty much sold down all the way to where almost it was at the beginning of June levels right there. But it got saved. It got super oversold right there on the RSI. So people started kind of coming in and saving it there. But again, I told you, it moves up fast and it moves down fast in these volume gaps when you see that. And so when it goes to be a red day, you can guarantee if it's in a volume gap, the pressure is going to be on, right? If dip buyers can't come in and save it, and again, there's no magnificent 7 in here. So, the question is, what companies are they buying, all that good stuff. And we'll see if it can try to recover. But once again, got to get over 187 first, that volume node. Then we got to get up to the all-time high anchor VWAP around 188, 189-ish, and try to close above that. Until that, again, I keep telling you, it's just nothing but noise, man. Nothing but noise about small caps participating right now. And Tesla, of course, like we talked about yesterday, it's just one of those stocks. It hit that trend line yesterday, but it held 276. But it's just one of these stocks that, unless there's some news comes out that gets people into the call buying, it usually would just trade sideways like this. And, is it going to fill this gap? We'll see. It'd be healthy if it went ahead and filled it and been done with it. So maybe it can move back up on a technical bounce. But when we scroll out, it's just one of those stocks that, to me, is always the hardest. Once you get out of these like gamma squeezes or short squeezes or whatever you want to call them, a combination of it, right? Once it gets out of that, it's hard to predict, because when it's not doing it, I mean up or down, by the way, it just goes sideways, right? It gets in these ranges and stuff. And so until the next news event comes out. And of course, there is going to be a news event out very, very soon for this one. And it's going to be this month, supposedly. It's going to be earnings, right? And so I think it has earnings, I think it's on the 19th, if I'm not mistaken. I could be wrong on that. Let's click on the E down here and see if this is correct. And so that might be the next news event coming out. But I mean, it did have a little bit of news today, which maybe I think was good for it, which was Tesla and Chinese rivals signal truce and brutal price war, right? So it was like a bunch of different Chinese companies and Tesla basically signed a pledge to stop doing abnormal pricing and try to outdo one another and undercut one another. So it should help stabilize the prices of the Teslas and all the other EVs for that matter. Again, we'll see if everybody holds their word on that. Now, AMD, it's actually in a good spot here, because it's got nice support underneath it with that trend line's already bounced off of multiple times. You got the 50-day right there connecting right up against that trend line as well. And so if it does drop a little more, you absolutely see a bounce for sure. I mean, semiconductors have been, people have been taking profits on semiconductors the last couple of days, which, no shock there. Meta, even on a red day like today, it actually set a new 52-week high, almost hit that 299.30 area right there, around 300. Fell a little bit short, around 298. Obviously, continues to just grind up in this wedge. We'll see how long this divergence with the RSI, keeps happening. I mean, to me, that right there is obviously a perfect place to dump it if it was going to dump at all. Maybe start filling some gaps. But hey, a lot of people would talk about Meta is when you look at as far as the metrics and the valuations on it versus some of these other ones, you go, well, actually, not quite as bad as the other ones, right? And so, and I heard they rolled out something today, which I've seen a lot of people didn't like or whatever, the whole challenge to Twitter and stuff. But, we'll see if it continues to push up or not. But again, that's what you look for. So instead of the V-shaped recovery, we'll start looking for the check mark recovery. If you know a technical term for that, let me know. It's the only thing I can think of. But it's just those big ones coming in, rescue to save the red days and stuff. And we still end up red, but nowhere near what we were. Okay, and so you just got to keep that in mind. Again, it's hard to judge these weeks because it's a holiday week. The market's been open. Once it closes tomorrow, it'll be 3.5 days. And on holiday weeks, especially when you have 3.5 days open, it's easier to push up or down, right? Because if you're not getting everybody participating like you would in a normal week, it only takes a few big boys to push it down or to push it up, right? And so you got to keep that. Plus, news is usually, even trust me, I do a morning news brief every morning. News is usually slim on a week like this, and that's really been the case and stuff. And again, next week we got big earnings, so people will, kind of go, okay, let's go ahead and see what's going on. We got CPI data coming out, all that stuff. So that's another thing you see. So we'll see. I think the last couple of Fridays have been green, so we'll see if we recover. I know a lot of people are making bets on that, and we'll have to see what happens. But I know today's price action was at least better than the couple of days before it. My lord, it was terrible. Sitting in front of the computer looking at that price action. I don't know how you felt about it, but at least today you got some movement. So we'll see how tomorrow goes. Let me know in the comments what you think. Green or red for Friday, or just premium killing flat? Like, what do you think is going to happen here? So anyway, hope you guys got some out of it. Hit that like, subscribe button if you did. Really appreciate all of you for watching this stuff. And I will see you tomorrow.